Welcome back to another week in review. We're looking at the week of March 10th, 2025. Started with data just to get this out of the way like we normally do. So not too much coming into play on Monday this week, which is nice. Tuesday, we have JOLTS data at 10 a.m. Wednesday is going to be a big day. We have CPI that comes in at 8:30 a.m. And then we have the 10-year bond auction as well at 1 p.m., 2 p.m. federal budget. Whether or not that actually has an impact at 2 p.m., not really sure. But big thing on Monday or Wednesday, obviously, will be CPI in the morning. Thursday will be PPI and jobless claims at 8:30 a.m. as well. And then Thursday also has the 30-year bond auction at 1 p.m. And then Friday, 10 a.m. consumer sentiment, and then the University of Michigan inflation expectations. Just the preliminary prints coming in. So last time we had quite high expectations for 1 year. Inflation data come out of U of M, so we'll see if there's anything that moves the tape on Friday for that. Not really sure what to expect, obviously, with the data this week, as far as the prints, the market reaction, etc. But as far as what we're looking at, there's a lot of areas of interest this week. There's a lot that happened last week. There's a lot that's happening on higher time frames on the S&P as well as the Nasdaq. That's going to give us some pretty clear areas where we can manage risk and pretty clear areas that we can trade around this week. So to start off, just to kind of give a recap of what happened last week, obviously NFP week, a lot happened. Again, we had another trending week where we set the high on Monday, set the low on Friday, and basically immediate continuation on the sells on Monday, and then quite a bit of chop Tuesday to Thursday, and then obviously a bit of a liquidation that happened on Friday after the NFP numbers came out, and then obviously some pretty heavy buying to close out the session on Friday. So the big thing that I'm keeping in mind here is that the daily and weekly ranges are one-time framing down. So we've yet to be able to take out a high and force this into balance and shift this to one-time framing up on the daily or weekly time frames. Currently, the monthly is still technically in balance, but if we can't print over 6160s, if we can't print a new monthly high, the monthly is also going to be shifting to one-time framing down, and value is continually framing lower. So buyers have a lot of work to do, to put it bluntly. What we saw on Friday, in my opinion, was a better area for us to try and hold in the short term for potentially a local low or a swing low that we could put in. So just to go over to trading view, just to show simply here. So basically the trading range that we've been inside since November, the monthly balance range that we've been inside basically since November, from the lows into 5720s, we had a bit of a washout. We had a bit of a washout happen, and it took us into these old swing highs that we had from back in the summer. So we ended up actually closing back above the 200-day on the cash index as well as on the futures index on ES. But as you can see, there's a lot of work to be done here. So I think the big thing as far as what I'm looking at from a higher time frame perspective is on a weekly basis, we had the highest weekly volume that we've put in since the August low, and actually since 2023 back here on the S&P futures index. Doesn't necessarily mean that a bottom's in, but at least when we see high volume come in on these higher time frames, especially we're holding the 50-week moving average down here as well on the S&P futures, as well as the cash index. Pretty good indications that a bottoming process is in the mix, if not already there. So at least in my opinion, it's one of the simpler things I look for is just volume on higher time frames and where are we holding from a support basis. And we have both of those things. We have high volume on the weekly as well as holding a prior swing high and a major area on the cash index as well as the future index, and we close back inside the multi-month balance range that we had. So decent indications that we could at least have a short-term bounce here. As far as what I'm looking at for that to take place, it's going to be about 5720, really down into the lows here. So we had a lot of covering, we had a lot of buying basically take us out from that low and put us back over 5720, that prior monthly balance range that we broke down from. closed back inside of it. So I think first indications for me coming on Sunday Globex and Monday's session is last week's POC down into 44s, so 57.44s. So if we see a little bit of reversion back down into this area, this was very well bid, especially into the closing parts of Friday. So if we're holding 57.40, basically down into 57.44, I think what I'm going to be looking for is a back test of Friday's high up into 57.91s, and then if we have acceptance over 57.91s, pardon me, I'll be looking for the January low and the prior weekly balance range lows, again, that we broke down from into 58.13s. I think if we're looking to have a really solid sense of a low being in, at least for the immediacy, what we really want to see is buyers take us back over at 58.13s. So we want to see us back into January range. We want to see us back into the weekly balance range again that we broke down from. We want to see a lot of buying pressure and solid acceptance back above 58.13s. And at which point I'd be looking for the move back to 58.50s, and then back up into 58.80s, up into these old daily highs. We have a poor high from Thursday's session on the regular trading session. We also have, an ETH high. This ETH high is also awful. I really expect to revisit this pretty soon and clear this out and clean out 58.50s at least. So the expected move for this week priced in the S&P is about 140 points. Obviously quite high because we do have CPI, but the last few CPI prints that we've had, the volatility priced in was nowhere near this. I think the last one was around 90 points. So a pretty average day, pretty average week, I should say. This obviously the market's expecting, quite a big move. So big thing for me here, watching 57.50s down into 57.44s. If this starts offering, then I think the possibility of revisiting the low that we put on Friday is quite possible. I'm not super interested in trying to short this down here. I think from a short perspective, what I'd look for really would be, the loss of 57.20s again, with a lot of volume and a lot of selling pressure that takes us below this, at which point I'd look for the rotation down to the bottom of the expected move low, take out this low and look for the bottom of the expected move low, which is around 56.30s to 40s, which also coincides with an unfilled roll gap. So that would be the short trade for me. Lose 57.20s with a decent amount of volume and selling, and then look for the move down into the expected low, down into 56.40s. And long trade will be if we hold, either hold above Friday highs, or we hold 57.50 down into 44. I'll be looking for that rotation back up to get us to test 58.13s to 50s, and then potentially a breakaway up into the half back of the prior weekly balance range, down into up into 59. 20 to 40. So what we could potentially see here is, from a higher time frame perspective, we could have potentially seen a look below and fail on this higher time frame balance. So what that essentially would mean is that, we broke down or attempted to break down at least from this prior monthly balance range, and we actually, we peaked below and we closed above it. So in broader terms, from a balance perspective, that would target the reversion back up if this is indeed going to be a look below and fail, which would take us basically back up into 59.50s area, which also would coincide with the cluster of moving averages that we have. So I think the big thing, like if the market has put in a bottom and the market wants to be strong, the first sign, in my opinion, will be a break back over 58.13s. And then you'd really want to see acceleration, a squeeze, a nice short squeeze, as well as new organic buying, really start to move the tape up and get us up into the top range of the expected move, and then up into this pivot area up here into 59.40s to 59.50s. And then obviously the cluster moving averages we have up here too would be a magnet if we can start getting above. But I think the first real sign of strength, if that low is going to stick, will be real solid acceptance above 58.13s. So that's what I'm looking at for the S&P. The NASDAQ, to be honest, I haven't really traded much of the NASDAQ. It's been difficult. It's been, it's all major time frames are framing down as well. From a tape perspective, it's been very, very different. It's been very tricky for me to read personally. So I haven't traded it much. I've really been focusing on the S&P. I think as far as the NASDAQ is concerned, similar situation that it's in, so higher time frames are framing lower. For me, the big thing will be holding For simplicity's sake, again, holding the pivot down into 20,030s, basically last week's value area low. So again, if we see any selling early this week, I'd really want to see, as a buyer, I would really want to see 20,050 to 20K really hold down here, and then try to rotate us back up into these old weekly lows, and start testing again this 20,690s area. Again, if we're going to see, if we're going to see this market be strong, you'd really want to see the NASDAQ leading. And the big key for me will be if the NASDAQ can basically break back into this old balance range it broke down from, which is the lows of that are 20,690s. So a strong market, again, is going to coincide, or at least strong in the interim, if not a short squeeze, but a strong market's going to coincide with 5813s being accepted for higher, as well as 20,690s being accepted for higher, and that could potentially force the reversion trades back up. Again, weakness for me in the NASDAQ would be, losing 20,000s, losing 20K basically, for simplicity. And at that point, I'd be looking for the lows that we put in on Friday to get retested, and again down into 19,500s. So just to give a quick look at the NASDAQ as well, what I'm talking about from the balance range. Again, multi-month balance range that we were trading in and we broke down from, we've also offered it multiple times and gotten us lower. We still haven't had a close over the 200-day moving average in the last couple of days, on the futures chart at least. So you can see here what I'd be looking at. And again, from a strong market perspective, we need to accept back into 20,690s, get back into this range, and that can start forcing the reversion up and potentially target into the half back at 21.56, 560s. So still going to primarily focus on the S&P, but at least, from a holistic perspective, if we're going to see a decent bounce, if we're going to see, a solid low come in, what we really want to see is those inflows into those high beta names, high beta baskets, and you'd really want to see the NASDAQ start leading again, and that would be a decent indication that, at least a short-term low, in my opinion, is reliable. And I think the big thing from that spot would be breaking back into 20,700s area up here, and then forcing that reversion back up, which I think this could get very squeezy if we get back up in here. The same thing being true with acceptance back up, basically above 5813s. So hopefully that helps. Thanks.